Okay, it's Wednesday, February 1st, and this is a pre-opening SPY report on the first day of a new month. You can see here, first of all, that the pre-market range is kind of at the upper end of yesterday's green bar. We're a little bit to the downside to start, but that's okay. In terms of, first of all, the context as we start the new month, we're still here on the weekly chart expecting higher prices to take out these two highs here back last month, and there's another high here close to it back in September, and there's kind of a top here where we're looking until proven otherwise, until we get some kind of reversal. We're not really going to change that stance, and we'll see today if we get kind of maybe the green move right here from the start. Maybe we'll get a red to green move to start. We'll then see if we take out that pre-market high in order to kind of trigger that monthly move today. The key thing, we have the FOMC today at 2, in the afternoon, so you got to kind of be out of the market at that point in time and just watch and see what happens, even though you're expecting higher when it all settles out, but we'll see what happens. In terms of then the open of the month, it's a good time in terms of getting a new reference point. First of all, if we open here, let's assume this yellow line, which is yesterday's close actually, will that'll give us kind of an open for the month monitor. If we're above it, green. If we're below it, we'll be biased to the downside. This yellow line is the open of the week. So until that really turns red, this weekly bar is still to the upside. So we'll have two kind of key levels to monitor going forward in terms of if we're above it, we're bullish to the upside. If we're below it, to the downside, and we'll see how that settles out after the FOMC and after today's price action. Finally, in terms of like the monthly chart, now that we end the month, we could officially call this an inside month from in January. Even though it was green pretty much from the start and went up most of the month, we still have just an inside bar. So what that means is an actionable signal month is going to be either up or down, and breaking out the highs of that month or the lows. Clearly we're closer to the higher point to break out, and that will set up a target there. But also you can get failures with an inside bar. Keep that in mind. As long as we, whatever opening price is today, let's say we break above it and we reach our targets, the failure will happen if we come down below the open of whatever today is. So keep that in mind should we start up. But it could be a breakout too. We can head above, if we can hold above, go above all these levels here, then we could be heading up to higher months, and we'll just see how February unfolds. That's why I like a new month. In order for this month to be for the big picture to change, we're going to have an actionable signal to the downside here. Well, first of all, we can come to the halfway, we can break out to the upside and then come back to the halfway point of that bar. That would be a definite negative sign to keep in mind for February. Or it can never reach that high and we can go all the way to the bottom. But to go to the bottom, we're going to have to change the weekly chart first. The way this weekly chart changes is I don't even see an actionable signal here other than a 2 down, which I don't think we're going to get with 2 days to go in the week. That would then set the stage for a negative move that maybe will begin to possibly set up a 2 down month. There's a long way down there. So anyway, my point is you get to now really kind of stay biased relative to the new month, to the upside until conditions change, and that's going to first happen with a weekly reversal, which we're nowhere near yet. The way we would get that, let's say we go down for some reason, we never even take out the high, then we might have an inside bar here this week, and then maybe on Monday you get an inside bar to the downside, which targets that low here. So that's what we'll keep in mind. But until then, the bias is still to the upside. New month, 2 new levels to monitor: the open of this week, just to see if this week might fail, and then the open of the month, whatever that is today over here, wherever price opens. And that'll be a very key thing to monitor as we monitor this inside month that's developing with a likely breakout to the upside. Then we want to see if that upside area kind of fails or eventually continues higher towards even much higher targets. So that's what's developing today. But again, it's you can trade in the morning, I think, but I think that FOMC, even though they kind of know they're expecting the interest rates to be, I guess, a quarter of a point. You never know what the market's going to do in terms of how it's going to react, even though a lot of that stuff's built in already. So let's see how today unfolds, and then we'll really see as the close happen. I think we'll be a lot clearer towards the end of the day where things go next.